Our nation counts on the military. You can count on us. Navy Mutual has been helping active duty and retired military members and their families for more than 140 years. Our mission is to help you safeguard your loved ones, plan for your financial future, build a legacy. We provide affordable life insurance and annuities for those who serve or have served our nation. Learn how we can help you protect what matters most.
At Navy Mutual, we understand the needs of the military community. From enlistment to separation, we promise to be there for you and your loved ones. And we'll be there here after your service is complete as well. Our life insurance and annuity products can protect your family no matter where life takes you, and our educators and Veteran Service Organization representatives can answer your questions about benefits and financial security along the way. Military life keeps you busy, but being busy isn't a reason to let your responsibilities slip through the cracks. We know that your financial security and your family's future are important to you, and we are here to protect both. Our representatives can provide a financial needs assessment at your convenience and then suggest either life insurance products to protect your loved ones at the lowest cost possible, or annuity products that can help secure your retirement income. Finally, as a nonprofit organization founded by military members for military members, we know that serving our country can come with a unique set of challenges. We don't want anyone in the military community worrying about their own quality of life or whether the loved ones will be taken care of after their deaths. We're here to help you get the peace of mind you need by providing financial protection to those who protect us. So stay tuned today to learn about how our life insurance needs change when you hit a major milestone, leaving the military, and how you can prepare. Welcome. One element of Navy Mutual's mission is providing financial education and offering important information and tips that can help you thrive financially. From the time you join the military community until the time you leave active service and return to civilian life. When you leave the military, whether you've served 5 years or 25 years, it's a big shift. You may find another job, move to a new location, decide to enjoy the peace and quiet for a time, or a combination. Once you're off active duty, though, your benefits change, and it's important to know what is coming so that you can prepare financially. You may end up with retirement pay or disability pay, which can certainly supplement your income, but you will also have to make some important decisions about life insurance that we want to help you consider ahead of time. I am Tim Sturgis, and today I'll be hosting the question and answer session with Ellie Matlock, one of Navy Mutual sales managers and an expert in our products. It's a pleasure to have you here with us today, Ellie.
Well, I'm super happy to be here. Thank you for having me.
So, leaving the military. This is a big step for a lot of the people, whether they served for just a handful of years or been in the military their entire career.
Yeah, it's a huge deal, and it brings with it a lot of life changes. Most of those we won't get into today. I'll leave the benefits questions for Navy Mutual's Education and Veteran Services team, but I really do want to focus on changes to life insurance and the need to reevaluate what a family needs when a service member is separating.
Sure, let's start with a quick rundown of what life insurance options active duty service members have.
Absolutely. So service members group life insurance, often referred to as SGLI, is provided to all service members when they join the military. Currently, they are automatically provided with $500,000 worth of coverage, which is the most that they can get through the SGLI program. They do have the option to decrease that amount or opt out altogether, but we don't generally recommend that anyone drop their SGLI coverage.
Right. It sounds like a solid perk of military service.
It is, and it's very inexpensive too. No matter how much coverage is selected, SGLI only costs 6 cents per $1,000, which means $500,000 of coverage costs only $30 per month. But the price is decreasing even further this July to 5 cents per 1,000 or $25 per month. Everyone who participates in the SGLI program also pays a $1 per month premium for traumatic injury protection called TSGLI, which provides temporary financial support to service members who are injured while in the military. These costs are automatically deducted from a service member's paycheck, so most people don't miss that money at all.
So the military really does try to make it easy, and that coverage can be really important, especially if a service member deploys or does a lot of training exercises.
Even in their day-to-day lives outside of the military, you never know what's going to happen. I know I work for an insurance company, but I truly recommend that everyone who can get life insurance coverage gets life insurance coverage. It's peace of mind and usually quite affordable. When you need it, you need it. And if you don't have it at that point, it's too late. SGLI reduces some of that risk. And I want to get to one more benefit of the SGLI program. Spouses of service members also qualify. They can get up to $100,000 of coverage without medical underwriting, and while it's not free, it is quite inexpensive. And military children are also given a $10,000 policy. This one is premium free. This coverage is provided under the Family SGLI or FSGLI program.
Protection for the whole family.
Yeah, it's a great program.
So military family has an automatic coverage while mom or dad, or both, are serving on active duty?
Yes, and in some cases, we would advise service members to get coverage above and beyond what is offered by SGLI if their personal financial situation dictates it. But for the sake of simplicity, let's use a scenario where the family consists of one service member, one spouse, and one kid. And the service member has $500,000 of SGLI coverage. The spouse has $100,000 of family SGLI coverage, and the kiddo has $10,000 of coverage too.
Perfect. So what happens when the service member decides that it's time to separate?
Well, SGLI coverage remains in effect for 120 days after a service member separates from service, or 2 years after separation for those suffering from qualifying disabilities who extend their coverage. Traumatic injury protection also expires with SGLI. From there, service members have two options for continuing their life insurance coverage. First, the service member and spouse could choose to convert their coverage to specific commercial whole life insurance policies, meaning permanent policies, if they are within those 120 days of separation, and they won't have to deal with medical exams or underwriting. The coverage is guaranteed. The list of companies participating in this coverage conversion program can be found on the VA website.
What about their children?
Unfortunately, that conversion program doesn't offer coverage for children. Service members who want to continue coverage for their children need to find an alternative source of insurance.
So they would need to shop around? But you said the parents have two options. What is the second?
Yes, SGLI can be converted to a Veterans Group Life Insurance, or VGLI, policy within 1 year and 120 days of discharge. A veteran who wishes to avoid providing proof of good health via medical exam and underwriting must apply within 240 days of separation. This is a great option for the service member, especially if they have a health concern or disability, because VGLI won't turn you down as long as you apply within that 240-day period. Unfortunately, though, there is no VGLI option for spouses or children, so again, they need to find an alternative source of coverage.
Tell me a little bit more about the VGLI.
Of course. With VGLI, the initial coverage amount is based upon the service member's SGLI coverage at the time of separation, which is typically $500,000 unless service members have decreased their SGLI coverage at some point during their service. If this is the case, VGLI can be increased by $25,000 every 5 years up to $500,000 until the veteran turns 60 years old. Coverage remains in effect for as long as premiums are paid, but every 5 years, premiums, which are based on the veteran's age and the coverage amount, will increase. Despite the price increases, as I mentioned previously, a major bonus of VGLI coverage is that it will cover all veterans, no matter their health or disability status, provided that they apply within 240 days of separation. This ensures that they can maintain life insurance coverage when they may not otherwise be medically eligible for a policy. If they apply after that 240-day period, though, they could be declined for coverage based on their medical history.
What kind of prices would someone be looking at with VGLI?
Well, in our example, the service member has $500,000 of coverage, And remember, the family is currently paying about $26 a month for SGLI and traumatic injury protection. If the service member separates from the military at the age of 30, VGLI for the same amount of coverage could cost around $30 per month. If the service member got out at 50, comparable coverage costs $145 per month. By the time that same service member reaches 75 years old, it would cost nearly $2,000 per month to maintain that coverage. You can check rates for each age group on the VA's website. But again, this coverage could be invaluable if the service member has an illness or disability that would prevent them from getting life insurance through a private entity. But it's also a pretty steep cost that continues to increase through age 80. And by shopping around, service members may find alternatives that work for them and lock in lower premium pricing for longer.
Do you have any recommendations for service members who are leaving the military?
I'd advise them to consider all their options. First, look at the VA options. What does converting their SGLI to a commercial whole life policy look like? Can they afford VGLI? If all they want is a final expense product and they have a service-connected disability, they can apply for VA Life, but that only provides up to $40,000 in coverage, which is on the low end when it comes to coverage amounts. I'd also ask that they be open to exploring Navy Mutual's guaranteed issue flagship whole life insurance option. With us, service members who've separated from the military for 120 days or less and who are covered by SGLI are eligible for up to $500,000 of flagship whole life coverage without any sort of medical exam. As a perk, provided they were covered by FSGLI, spouses are eligible for up to $100,000 of that same flagship whole life coverage, and children under 21 years of age are eligible for a $10,000 child benefit rider, all without any medical or underwriting requirements. We want to make sure that service members and veterans have options.
Oh, that is a great opportunity for the whole family.
That product also locks in pricing at the same time of purchase, so the service member and spouse would have coverage for the rest of their lives, and pricing would never increase. It's really a great product.
Wow.
Yes, and we do recommend that spouses and children maintain life insurance coverage after the family's active duty affiliation with the military is done, or as a supplement during their service if the need is there. So it's great to have options for the entire family within one company.
Let's start with the spouses.
Of course. I'm going to caveat this part of the conversation. The $100,000 provided by the FSGLI is a relatively low amount when it comes to life insurance coverage. So we will often recommend that spouses get additional coverage while their service members are still actively serving. As far as coverage amounts go, life insurance policies for employed military spouses should cover the loss of their income for each year before their retirement if they were to suddenly pass away. And policies for stay-at-home parents typically need to cover all future childcare expenses and any other household expenses that would arise without their presence. Both employed and stay-at-home spouses should have enough coverage to pay off their personal debts and cover their funeral arrangements. If the $100,000 provided by the FSGLI would not be enough to pay for all those costs, which a family would determine by doing the math or performing a financial needs analysis, they should explore other life insurance options. Then, when it does come time to get out of the military, spouses should consider converting their FSGLI to a commercial whole life policy or purchasing an equivalent amount of insurance elsewhere. As I mentioned, Navy Mutual offers that guaranteed issue coverage, but for a spouse who wants additional coverage while still affiliated with the military, we also offer term policies that last for a set length of time or permanent policies, which last for the spouse's life and lock in lower premium prices the sooner someone applies. Full disclosure, these policies likely require a medical exam or at least require the spouse to answer some medical questions.
That makes sense. And the children?
The downside of FSGLI coverage for children is that for the most part, it expires when a child turns 18 years old. And unlike spousal coverage, it is not convertible to any other type of policy. So the parents need to think about how they want to tackle their children's insurance needs. While the kids are minors, they can generally be listed on a parent's policy in the form of a child rider, but again, these offer low amounts of coverage, typically under $25,000, and they expire when the child ages out, which makes them a good option if something truly tragic were to happen in childhood, but doesn't do much once the kid is an adult. Parents could consider term policies, which typically become available when a child turns 18 years old, or if they want to start younger and ensure that their child has coverage for life, a permanent policy. Life insurance is almost always cheaper the younger a person is when they get it, and a permanent policy never expires, meaning that the children would have coverage for the rest of their lives. Even if the parents started with a relatively low amount, say $100,000 per child, it would protect the children if they became uninsurable in the future. And since permanent policies typically have a cash value element, it allows time for that to grow and accumulate, which is an added bonus if a child ever needs to take a loan from the policy.
So you're saying that parents have options?
Exactly. And while separation from the military is a really good milestone moment for families to start talking with an insurance representative about their needs, there's nothing to say that a family couldn't start earlier. In fact, we recommend starting early so that there is never an unintentional lapse in coverage. It would be truly tragic if an accident were to happen while a service member or spouse was in the process of transitioning policies, but didn't have any coverage actually in place. Our goal is to protect military families.
This has been really informative. I appreciate you taking the time to answer these questions and walk me through SGLI, VGLI, and some of the alternatives to these programs.
Of course, I'm always happy to answer questions. To that end, if you're watching this webinar and have some questions of your own, we'd be more than happy to find you those answers. You can reach a member of our team by emailing counselor, counselor, at navymutual.org. Again, counselor at navymutual.org, or by calling 800-628-6011. Navy Mutual is here to serve the military community, and we would love to walk you through a financial needs analysis, taking into consideration where you are in your career, what your family looks like, and the options that are available to you both through the military and outside of the military. We are here to make sure that your family has the peace of mind and protection that life insurance can provide. Thank you for joining us.